Alrighty, guys. Everyone can hear me. If you can't hear me, if you can't hear me, just please type yes. We're starting right now. All right, great. Sounds good. All right, guys. So in this class, we're going to simply talk about how to pick your strikes and your expiration dates for each of these three types of chart patterns that we went over for the past several months, but we're just starting now to really go into the detail on how to trade these three types of chart patterns. So last week we went over three main type of chart patterns we need to look for, those being hook patterns, breakout momentum, and channel or range bound trades. So for the first example here, let's go over Facebook. This is an example we went over last week of a hook pattern. All right, so let's do this. Let me do a side by side here, or let me just get the option chain up here. I'm going to show you how to pick the strikes and expiration days. All right, guys. So first off, first example, let me zoom in this a little bit here, Facebook, so you guys could see the prices. All right, so on a hook pattern type of, that's one of the three main types of charts we trade. And like I said, we're going to go over now how to pick strikes and expiration dates. And last week, I went over our entry and exit points on each of these types of three chart patterns. So if you don't yet know where our entry and exit points are on these three types of chart patterns, please just go to the Facebook video, the class from last week, check that out, and make sure you're caught up to that before you start watching this. So basically last week we talked about a hook pattern being one of our favorite types of trades, because if you're finding a quality stock to trade a hook pattern off of, like we did with Facebook, you can make substantial returns off of just a quick short swing trade here. So basically for a hook pattern, last week I told you we're looking at the base for our entry. The first day we get a break above the previous day, that's going to be our entry point. So the first day we get a candle that's trading above the previous day, that's going to be our entry point. So as you see here on the Facebook pattern, the Facebook hook pattern trade here, you see we have 4 days of the stock trading right at the base. So you see here my mouse, we have the first day we stayed at the base of around 170. The second candle here, the green candle, we stayed above that 170 base. And then the third candle, again, stayed at that base. It climbed above the previous day's high, which was a good sign. So we could have, at the end of the day, said that was our entry. But for confirmation of a trade, we're looking for a break, a clear break above the previous candle. So as you're looking here, this little doji right here, that would have given us our buy signal to enter into a hook pattern on Facebook. And so what we're looking for is we want to get either an in the money or at the money strike for a hook pattern. So if Facebook in this example is at 175, like I said, going back to last week's class of a hook pattern where we're looking for that stock to go to, usually it's halfway between the shaft of where she dropped from. So right here you see it's right around 219 a share down to the base, so it dropped down to 170. So the difference between 220 and 170 is 50 points. So 25 points higher than 170, that's 195. That's usually going to be our target. So halfway from the drop, from the height of the drop down to the base, that's a 50-point move here. So typically we're looking for it to rebound by 25 points, half of that drop. But like I said, each case, each stock is differently. And in the pattern here with Facebook, we've seen that we had some major resistance right around 185. So if you have some type of resistance that's on that hook pattern between that 25-point rebound that you're looking for, instead of it being that 25-point rebound you're looking for, If you have resistance below that, that's going to be your target. So as we see here, we had resistance around 185 for Facebook. And so at 175, we said we were buying. We're going to go into the Expo dates in a second here. But like I said, the first time we get that buy signal, we're looking for an either slight in the money or an at the money strike. So if the stock's at 175, we could technically do the 172.50 or possibly the 175. Now keep in mind, the deeper you go in the money, so if the stock's at 175, if you're doing the 175 strike, if that stock goes against you tomorrow by $1, you're going to have a loss there. You know, the trade's going to be fully out of the money. So if you have the 175 strike call and the stock's at 175 and tomorrow the stock drops by $2, well, now that stock's $2 out of the money. You know, whereas if you have the 172.50 strike call and that stock's at 75 when you enter and then it drops 2 points, it's now at 173, you're still 50 cents in the money. So you still have some value there in that option. And what I want to say there is the deeper in the money you go for those strikes, the lower the risk that trade's going to be, because the larger the move the stock has to make to go against you to lose that full value. So I want to make sure you understand that you want to go with something that's either at the money or slight in the money. This is going to be your lower risk, lower type of, I don't want to say, you know, because as you see, if you're trading a volatile stock like Facebook, you're seeing some of these average true ranges of $5. So, you know, if you're doing, like I said, Facebook at 175, you're doing the 172.50, 175. If you're doing the 180 strike, Facebook's at 175, you're going to need it to climb 5 points just to break even. So it's very important. Like I said in last video, I see a lot of people, their mistakes that they're making and how they can, you know, recover from that or make some type of plan that's going to prevent them from taking the losses. Because a lot of traders are taking on losses because if Facebook's at 175, they're going for that 190 strike. And you guys see this in the trade room all the time, whereas if I post a trade that I'm making the 175 strike call on Facebook, for example, you'll see someone in the trade room say, okay, I'm buying the 185 strike call for this week's Expo. And, you know, like, if you're looking at the delta, the thetas for that, and the probability of that trade making money, you're going to see that the probability of that trade making money, if you're buying the 185 strike when the stock's at 175, especially if you're going with the weekly Expo, there's a very low probability that that stock's going to move 10 points just to get to break even. And then it's going to have to climb additionally above that to start to make a profit. So like I said here, hook patterns, what we're looking for, a strike price, we're looking for an either slight in the money, which means the next strike below where the stock's currently trading at, or the strike where the stock's currently trading at now. Okay, so the perfect example here is the Facebook. So if we entered right here, I can't see the dates on this chart here, but if we enter on this doji right here, and the stock's at 175, we buy the 175 strike. First off now, what expiration date are we going to get? All right, we just went over where our target is. Our target is 185 since that's the next resistance, since that's between our rebound from Facebook having that 50-point drop. Our rebound, we're looking for 25 points, but we have that resistance. So that's going to be our target to take profits. As soon as the stock gets to that resistance or to that rebound, if it doesn't have resistance between the drop and where we're looking for it to go to, then you're going with the normal 50% from the drop to the base. But here in this example, like I said, 185, that's our target. So what we're looking for is the time frame that Facebook is now going to take to get to that 185 target. So how do we decide what expiration date to get? We just said the strike price for the best risk to reward ratio, the best probability. We're looking at an at the money or slight in the money strike. Okay, so we got that settled. All right, our strike is an either at the money or slight in the money for a hook pattern once we get that confirmation. So we got that confirmation now, and like I said, we have to decide on the Expo next. And what we want to decide on the Expo is basically the time that it took for the stock to climb the points that we're looking for it to climb. So if it's at 175 and our target's 185, we want to see typically how long it takes for that stock to make a 10-point move. And you do that simply by looking at your true ranges, and we could also look at the patterns here. So in this particular chart right here, we're looking at a hook pattern. But if you go back before it had that drop, you could see that since right about here, it started climbing. And you could see the waves. It had a climb, consolidated, profit taking. It had another climb. It had some consolidation. Then it had another climb, consolidation, climb, consolidation, climb, consolidation, and a climb before we had that drop. So as we can see here, each one of these climbs that we're seeing, like, for example, right here, it went from 190 to 200. Each one of these candlesticks represent 1 day. So let's take a look. Here's 1, 2, 3, 4, 5, 6, 7, 8, 9. So it took 9 trading days in this pattern right here for Facebook to get to that 10-point move. So now let's take a look at the next wave higher and see how many days it took for it to climb that 10 points. So here I'm looking at, okay, it went from 170 to 180 in 1, 2, 3, 4, 5, 6, 7 days, less than 7 days. So if I'm looking at the Facebook trade and I'm saying, okay, if we're just looking at these two, say the candles right here now, all right, we're trading right here. We just entered, the stock's at 175, and we see it had a base. Everything's looking good. We just got our confirmation that the candle went above. Stock's at 175, so we decided to go with the 175 strike call. Like I said, we're debating now of what Expo to go with. Are we going to go with the weekly Expo, maybe next week's weekly Expo, or are we going to go with a monthly Expo? And you have to understand that the further you go out for your expiration dates, the more premium you're going to be paying for that option. Okay, so there's going to be a point where, you know, if you go too far out, the price for that's going to be so expensive that it might have a delta of only 20 cents. So if it has that 10-point move to our target of 185, it's only going to increase by $2 that premium. And if we're paying $10 for that premium, that's only a 20% move, which isn't bad. But, you know, on certain types of hook patterns, especially these three, the hook, breakout, momentum, and channel range bound, we're looking for large gains with these types of patterns. So like I said, we want to decide what Expo to go with, and we just went over the previous runs that Facebook had before that, and we're looking at its average true range recently, and we decided, you know what, if we go with this week's Expo, even though it's Sunday now, if we entered into this trade tomorrow, or let's say today was Monday and we entered here, you know, this week's Expo, that's only 4 or 5 trading days. That's too short of a time frame. So in my mind, I'm saying I'm definitely at least waiting for not this week's Expo, but the following week's Expo. I'm going to take a look at those strike prices, see what they're trading at, and then I'm going to make an assumption and do like a little back trading here and say, okay, let's look at the delta, the theta. If this stock climbs 10 points to our target of 185, what's this stock going to be at next Friday if we're at 185? And I'll calculate that then. So if the stock's at 175 and we buy the 175 strike for next week's Expo for $5 a contract, that means at 180 we have a break even, and at 185 we have 100% return. So we're going to look then and say, okay, if that's not this, let's see here. So this expiration date, let me look at my phone so this doesn't come off here. So this week's Expo is the monthly September 21st Expo. So we're going to be looking at the September 28th weekly Expo. So if we're looking at the September 28th weekly Expo for the 175 strike call, and that's only $5 a contract, and like I said, our target's 185. If we get there, we're going to have 100% return if we go with the September 28th Expo. Then what we want to do is take a look at the Expo after that and see what type of return we would have if Facebook reached that 185 target. So if we're then looking at the December 7th expiration, which is the following week's Expo, and this, I'm sorry, November, not September, or October. So if we're looking at the October 5th expiration, and that one's only 50 cents higher than the September 28th Expo, then time is on our side, and it's better off to go with that Expo. Because obviously you guys could see anything could happen in the news, and it could bring the stock down a few days before it continues to rise. So the more time you have on your trades, the better off you are, and the higher probability, the lower risk you're taking, because theta is not taking away your time decay so quickly on a weekly Expo. The more time you give yourself, like I said, the better. So hook pattern, it's very simple. Like I said, we're waiting for confirmation, which is a break above the base. The first candle that we get a break above the base, that's our confirmation that we want to enter. So right here where you see this doji, that's our entry. If that's at 175, the stock's right there. Once we get this confirmation, then we're going to go with the 172 or 175 strike. Slight in the money or at the money strike. And then like I said, for picking the target price, halfway between the top to the base, or if you have resistance between that, resistance is going to be our target. So in this example, Facebook has resistance at 185. That's going to be our target. So we got confirmation right here of a hook pattern. This is a good buy. We enter. Facebook's at 175. And like I said, we don't want to go with this week's Expo. It's not enough time, especially when we're seeing here that's taken between 7 and 9 trading days. So we're going to go with the next week's Expo, not this week, but the following week's Expo. And like I said, our strict target is 185. Once it gets there, we're going to take a profit. And our stop loss is A, if it closes below the previous candle. That's really important, guys. On a hook pattern, we're going to close out if the next candle is below the previous day's low, okay? Or if it trades below the base. So right here, the base is 170. So if it dropped below the base, or if it dropped below the previous day's candle here, which is below the base, that's our exit. Okay, and like I said, our strict target is 185. If the stock gets up to there, we're not being greedy, we're not holding on. That's our exit. That's when we take profits. So that's what we do for hook patterns, guys. Now let's take a look at breakout and momentum patterns, okay? So let's take a look at Nike, for example. So here's a chart on Nike, and the beautiful thing about this is it's following a pretty strict chart pattern here, and what we're seeing here, specifically from May until September, we're seeing that the stock is climbing and it's holding support at this red 50-day SMA. So like I said, breakout momentum, our entry is the first day we close. I don't have the 10-day SMA on this chart, but the first entry is the close above the 10, 20, and 50-day SMA. So for example, if we entered, let's say the 10-day was below, right around the 20-day SMA here. Say we get an entry, and you don't have to put on the 10-day. The 10-day Expo is for a shorter time frame. So if we're trading anything less than a month's Expo, we're looking at the 10, 20, and 50-day SMAs. If the trade we're entering is longer than 30 days, then we're going to focus on the 20, 50, and either the 100 or 200-day SMAs. So in this example here, we're seeing that Nike is following the 20 and 50-day SMAs extremely well here from May until September of this year. So like I said, our entry is the first day we get a move and candle above all the SMAs. So if we entered here, for example, right sometime in middle of May, our exit is the first day it closes below that 20-day. So right here, we would have had our close, and we would have closed out this trade. So we would have went from 70 to about $74 a share, which is a significant move. And when we're doing breakout momentum, we're really looking for regular calls instead of spreads because we're looking to capitalize on a large move. So guys, when picking an Expo and a strike day for our momentum and breakout chart patterns, what we're looking for, first off, we always want to go with an at the money or an in the money strike. The only way we really want to go out of the money is if we're looking at a trade that's longer than a month out till expiration and that we're looking for a significant move. So if that stock's telling us that this chart is looking like it's going to have a significant move higher, and we're going with a further out expo, longer than 30 days, then we're going to do a regular call, but we might go a little bit out of the money. So if the stock's at $70 a share, maybe we might do the 71, or maybe even the 72 if it's, maybe 2 or 3 months out till expo. So it's all relevant based on, your time frame that you're looking for, the type of move you're looking for. But let's just go now on this pattern and say what we would do on this, okay? So like I said, we got a confirmation and a buy signal the first day the stock moves above the SMAs. So right here, for example, if Nike's at $70 a share and we feel that she's going to make that next leg higher, what we first want to do is look at the previous moves that she's had. So guys, stocks trade in waves of, it could be anything. It could be the 10, 20, 50-day SMA. What you're looking for here, see how the stock rises, it consolidates, rises, and then it consolidates, rises, consolidates, rises, consolidates. This is what we have to look for, guys. This is so important. And when I'm looking at charts, I'm always looking at what the stock has done previously, what it has done, and what the general market conditions are at the time of that trade. So first off, like I said, when we're looking at these waves, let's take a look at this first wave here. So let me actually pull up a live chart of Nike. That way we could see the prices and what's going on with the stock. So for right here, for example, let me get rid of this average true range. All right, so let's take a look. This is Nike. This is right now. This is live. Nike currently is at 83.24 a share. Nike's not a good buy right now, and I'm going to tell you why. First, let's take a look at what type of move Nike typically has when it has that next wave higher. So we're going back here to October. Let's take a look right here. So here was the first wave. You see it had a wave here higher. It consolidated, had a wave higher, consolidated, was flat a little bit, and then it had a wave higher, consolidated, wave higher. Let's take a look at those waves higher. Let's take a look at the time frame of that wave higher that it had, and let's take a look at how much that stock went higher during that time frame. So from right here, we're looking, Nike was around $51 a share. It had a wave, it moved higher, it got up to around 56, 50, 50. It didn't quite get up to 50. It did get up to 57. So let's say from 51 to 57. So that had a 6-point move. And with Nike at $51 a share, that's over a 10% move. Okay, so if we're looking at that, we say, okay, Nike moved from 51 to 57 on the first wave. So that's 6 points there. Okay, let's take a look now at the time frame it had to make that move. Okay, so we're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. So that's 9 trading days. Okay, and you have to remember that's 9 trading days. That's not 9 calendar days. So there's 5 trading days in a week with no holidays. Then you have the 2-day weekend, and then you have your next few days there. So we're looking at this already saying, all right, if we're getting in at the base of that wave where it consolidated, we already know that if we go with the weekly expo, it's not enough time. So right off the bat there, we're already saying we need a minimum of 2 weeks expo. That'll give us 10 trading days if there's no holidays and 4 days for the weekend. Okay, so 14 days and 10 trading days. So like I said, that first wave, we had a 6-point move. Now let's see how long it consolidated for. So we're looking, all right, it had each one of these candles, like I said, represent 1 trading day. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 13 days, it just stayed flat. It consolidated. Might have rose about $1 or less than that, but that's our consolidation phase. Our next breakout or wave higher is a clear break between above the 10, 20, 50 SMA. So it was either here on 11/15 or 11/16 of 2017. So let's see, what was the stock at right then? It was around 56.50, let's say. 56.50 or 57. That's at the high end there. But let's say 57 just to make things simple, because you're not always going to get in at the base at the best price. So let's say we got in at the high end, 57. Okay, so if we got in at 57, the previous wave, like I said, we moved around 6 points. So we're looking for that around 6-point move again. So we got in at 57. Our target then is then 63 or 64. So let's see what happens. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So we have 23 trading days then that the stock rose. If we got in at 57, like I said right here, we got in at 57. We didn't get a sell signal until around $63 a share. What did I just say before I looked at that? I said we're looking between 63 and 64. Look at how perfectly that just worked out live with you guys without checking that before. So we already know that we're looking for that, 5, 6, 7-point move. Once we get there, we're probably going to see some type of consolidation again before the next move higher. And what you can do is see the waves, how much the stock moves. So the first wave, like I said, we moved 6 points. The second wave right here, again, we moved about 6 points. All right, so now we're going to check the next wave again. So after that wave, you see we consolidated, and then we didn't get a buy signal until right here, around $65 a share. So 65, like I said, the previous ones, we did have a 6-point move. So if we got in at 65 here, it went up to 69. That's only about a 4-point move, but it still had that move. Like I said, every wave's not going to be, exact. We're looking for an average, so we had a 6-point move, 6-point move, and then here we had about a 65 to 68. So we had a 3-point move the third wave here. We dropped, we consolidated down to the 50-day SMA, and then we had our next wave. And our next wave went from, 64 all the way up to 70. So there's another 6-point move from the base of that 50-day SMA, which would have been our entry signal. Okay, so that would have been our entry signal on that wave, and another 6-point move. And then we had the consolidation, and it stayed flat for a bit, and then we had another nice breakout here. And it went from around 69 all the way up to about 74, 75. So you're already thinking, all right, we had a minimum each wave of at least a 3-point move. So right now, like I said, Nike's not a good buy right now, and let's take a look why. And let's look at these previous wave and consolidations here. So here's the most recent from July and August. So from July, we went from 76.70 to about 80. So that's about a $3.50 cent move higher, $3.50 point move higher. Okay, and then again right here, most recently, from 80 up to 83.50, that's a $3.50 cent move higher. Now, what did I tell you? Back here, we had a 6-point move before we consolidated, another 6-point move before we consolidated. Here, we're seeing a 3.5-point move consolidation, 3.5-point move consolidation. We just had another 3.5-point move consolidation. You see that red candle up there, and now tomorrow is going to be the big deciding day. If markets are down tomorrow, I think Nike could definitely come back to that 10 or 20-day or possibly even that 50-day SMA. And then once we get that first bounce off of either the 10, 20, or 50-day SMA, that's going to be our buy signal. And now let's get into strikes and expos. And like I said, our entry, since we're already seeing it come down, we're looking for that consolidation phase again. So once we get that consolidation, like right here, the last time, we came down to that 50-day, and then we started to climb after that. Okay, so we're looking for that again. When we get down to that 50-day, and then we start to climb from that. Or it could be the 10 or 20-day. So we have to see. Now, if the markets go down tomorrow, and we get a red candle here, and we're already starting to see that dip, that consolidation or profit-taking phase, we know that Nike is going to be pulling back and heading back down to either the 10, 20, or 50-day SMA. And like I said, so when we get our buy signal, we're going to be looking for Nike to bounce off either the 10, 20, or the 50-day SMA. The first day we get a close at that level, and then the next day we get a climb, which is a clear candle above the previous day's candle, then that's going to be our confirmation to buy. And again, with this type of pattern, we want to buy an at the money, slight in the money. If we're expecting a huge run, we could go a little bit further out of the money. Maybe if the stock's at, for example, if it's at 80, we could buy either the 80, we could buy the 79 or 78.50, 77.50, whatever the next strike is below $80. Or we could go slightly out of the money if we're getting a trade that's 60 days or longer until expiration. Because like I said, our main focus is to take advantage of that next wave. So if you have a shorter term frame, you know that you're catching that wave, and the first time you start to see that wave top off and start to see some profit taking, that's where you're taking your profit. Whereas, let's take a look at this now. So that's if we're doing a shorter term trade. Let's say, for example, you want something longer, something a little bit lower risk, but it's a longer trade. You could look at this pattern of Nike and say, okay, every time it comes down to the 50-day SMA, she's bouncing off of it and heading higher. So what your strategy could then be is you could, instead of just capturing one of those waves and taking your profits, locking it in, which is what I like to do. I don't like trades typically further out than 60 days. I rarely make trades that are longer than 60 days until Expo. But, sometimes I do them. But like I said, if we want a short-term trade, we're looking for one of those waves. Whereas if we want to get a 6-month Expo, we're going to look to take advantage of a few of these waves. And our entry is going to be, like I said, on that 50-day SMA. That's the bare minimum. We don't care about the 10 or the 20-day. If we have something that's as far out as 6 months till Expo, we want to wait until that stock drops down to the 50-day, and then we get a bounce off of that. That first day we get a bounce off of that SMA, or if you want to be extra safe, wait till that second day. Then we could wait until that entry to enter and take advantage of that 6-month trade. But like I said, for our purposes, we're typically looking at trades less than 60 days. So like I said, our strike price is either at the money, slight in the money for a momentum breakout trade, and our target is that wave. Once we see the top of that wave and the next candle is below the previous day, that's when we're taking our profits and exiting that trade. And as far as the Expo date, like I said, we're taking a look at these waves. How long does it usually take for Nike to make that wave higher? So if we're looking 1, 2, 3, 4, 5, 6, 7, 8, 9 days for it to have that move higher before it started consolidating. 1, 2, 3, 4, 5, 6, 7, 8 days before it started consolidating. And then if we go back here even further, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days before consolidating and making that next room. So we're seeing here that we're having an average between 7 and 10 days, let's say. So that means we really don't want to go with this week's Expo once again. We want to go with something, 2 weeks out. If you're looking for a trade that's this week's Expo, you're looking for some type of event trade or something that you're expecting to make a large move. You always want to give yourself enough time till expiration and enough time for the stock to reach your target or your stops for that trade. So the longer time you give yourself, the better off. There's a lot of people who on Wednesdays and Thursdays, they come along and they make trades for this Friday's Expo. You have to understand, you're basically flipping a coin. If the market doesn't do what your trade needs it to do, for example, if you have calls on Nike and the Dow doesn't climb, if the markets don't climb this week, or if you're entering the trade on Wednesday, if the markets don't climb Thursday, your trade is going to immediately be down. Let's say the stock moved down 1% the next day. So Thursday you're looking at a minimum of a 50% loss if you just entered on Wednesday and on Thursday we had a drop. So to avoid those substantial losses overnight, we're looking for trades that give us enough time for the stock to move to our targets. And it's extremely important for that, guys. If you're looking for get rich quick, this market's not for you. It's been a tougher market than we've seen for the past 5 years. So what we have to do is focus, and we have to trade these types of patterns. These are 3 main types of patterns that we could trade for large profits. And it's simple, guys. If we just follow the setups, entries, targets, stops for these 3 types of chart patterns, we can make substantial gains. You just have to be patient enough to look for these types of patterns, do the due diligence of finding out what each wave is moving, what the time frame is, the types of move, the average true ranges, your SMAs. And like I said, Nike right now, if the market goes down tomorrow and Nike has a red candle, that to me is telling me that Nike is going to be consolidating before it runs higher again. So I'm not going to enter into Nike until I get that confirmation that she's bouncing off and going into that next wave higher. So for breakout momentum, that's what we're looking at. Those waves, consolidations, and SMAs. And as far as strikes go, we're always doing at the money, slight in the money. If we're expecting a large move and give ourselves at least 30, 60 days till Expo, we could get a slight out of the money. So for example, if she's trading at 83.24, we could possibly get, I don't know what Nike trades at, if it's trading at, let me see here. So Nike right now for the weekly Expos, we do have the, so it's at 83.24 now. So you could get the 83.50 or 84 strike call for a weekly Expo if you're going for at least 30 days out. So for example, if you're going with the October, or let's say the November 2nd Expo on Nike, and again, Nike is not a buy right now. Like I said, we have to wait until she consolidates and get that confirmation of that move higher before we enter. But like I said, if she was just done consolidating and we got confirmation of that move higher, for example, we could get the November 2nd 83.50 strike call for $3.17 a contract, or the 84 strike call for $2.93 a contract. So if we got the 84 strike call for November 2nd Expo, it would be 86.93. We need the stock to break even, and another $2.93 to make a 100% return. But like I said, again, Nike is not a good buy right now. It looks to me that she's going to be in consolidation mode before the next wave higher until we see this market start to stabilize again. And like I said, the market, it's just down slightly right now. Let's take a look quick. So right now the Dow's down about 46 points, S&P's down about 5, and the Nasdaq's down around $19.75. So it's really not much. Someone was saying that the futures were crashing before. That's not crashing. That's a small move, nothing significant. Mondays are our observation day. We want to see what the trading day's like. Then maybe towards the end of the day we can make a trade if the markets are higher. If the markets are lower tomorrow, we could start to look to take some profits on some of our trades. So like I said, this was an example of a breakout momentum where we want to take our profits, where we want to enter our strike and our expiration date. It's all with the waves. So for our Expo day, we're looking for the wave basically times 2. So if the wave here was 1, 2, 3, 4, 5, 6, 7, 8, 9, if it was 9 trading days, then we're looking for something, for example, double that. So let's look for something 10 trading days. So if we got in tomorrow, for example, you're looking for a minimum of not this week's Expo, but next week's Expo. So that's what we're looking for, the wave times 2. And as far as the strike go, we're looking at an at the money, slight in the money. If it's a large move and we have at least a 30-day Expo or longer, we could go with a slight out of the money. For example, the 84. But if we're trading this anything less than 30 days, we're looking at the 83 or even possibly the 82.50. Like I said, that's if Nike was a buy. It's not a buy now. So our third type of chart pattern now is a range-bound or channel-bound trade. Let's take a look at Salesforce for that. Salesforce has been one of my greatest trades. I just closed out a huge profit for it of over 200% last week. Last week was a fantastic trading week. We capitalized on major profits last week. And, as you can see on all those charts that I just went over, we were in that wave. You see here, here's the same thing with Salesforce. The thing with Salesforce is it's trading within a channel that we can control and trade off of, for quite some time. This is going back 1 year. If we click 3 year, look at this, from all the way back to December of 2016. So for almost 2 years, we've seen Salesforce follow within this channel. So like I said, for the channel and range bound trades on Salesforce here, like I said, same thing first. We're going to look at the waves. Here's a wave. Here's consolidation. It came back down to the lower band here of the channel. Here's another wave higher. Here's some consolidation. Here's a wave higher, consolidation, wave higher, consolidation, wave higher, consolidation, wave higher, consolidated. Now it just had that wave higher. And that's why we had such a great week last week. If you guys are looking at my post that I made last week, you can see we made over $80,000 on our trades. And that was from capitalizing from this wave. You see on Salesforce we had a wave. You see on anything you're looking at, you see this wave higher we just had. So we had a significant wave higher on our trades. Even stocks like Boeing, for example, had a nice wave higher. See a wave, consolidate, wave. But this here is actually a range-bound trade as well. That's kind of going into a triangle here, but that's not what we're going over now. Let's go back to the Salesforce. All right, so this channel right here, guys, like I said, this is a range-bound, channel-bound pattern that we take advantage of. So we could already see that Salesforce, it's been following the 50-day really nice. 50 days, that red line here that we see, that's 50-day simple moving average. We see that it's really not breaking below that. And most importantly, it's staying within the channel. So we're looking at these channels here, the outer band, the lower band here, and we're seeing right now Salesforce, it just got to this upper band here. It failed to break above the previous day's candle. And, like I said again, tomorrow is going to be our big decision day. If Salesforce is below the previous day's candle and starts to consolidate again, then we're going to exit our trades on Salesforce, lock in our profits, and move on to the next trade. If she continues to move higher, we'll stay into the trade until we get the confirmation that it's a sell. Okay, now as far as what we're looking for with this trade, like I said, once again, we're either looking to enter the trade once she gets down to the SMA, either the 10, 20, or 50, or once she gets to the lower band of this channel here for our entry. And we're waiting for confirmation, guys. I'm telling you this because there could be so many people that, let's take a look right here on Salesforce. They said, okay, she got down to that 20-day. If it was trading right here on March 21st, and you said, okay, she's at the 20-day SMA right now, I'm going to enter and go long. That was a bad mistake you made because she continued to fall. So to get confirmation on a trade, we're looking for a confirmation above the SMAs or above a bounce above that that support area or the SMA or the lower band of this channel here. So for example, right here, Salesforce, it got down to the lower band here of this channel. That was our time. That was our entry point. And like I said, our target is for her to have that wave higher. And then once we see it break below the previous day's low, that's going to be our exit, or once she breaks below the 10-day. That 10-day is our target, or if we want to be a little bit more specific and a little bit tighter on our trades, we could say, okay, the first day we get a close below the previous day's low, that's going to be our exit. So right here on this candle, we closed on 4/20/2018. She closed below the previous day's low, so that would have been our exit instead of waiting for her to drop even further down to that 10-day. So that's what we can do. And like I said, the time frame for these, we're looking, again, waves. These stocks, especially when you're in a strong market, you're going to have breakout, you're going to have consolidation, then breakout, consolidation, and breakout. It's like stairs. If you're looking at this, it's just stairs. She's climbing, profit taking, climbing, profit taking, climbing, profit taking. So what we want to do, like I said, we're looking at these waves. Here's a wave here, consolidation, wave, consolidation, wave. So let's take a look at each of these waves. How many days are in these waves on average? So we're looking here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days that wave lasts for. Now let's take a look at this one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 days. So already we're seeing, all right, we're in double digits, higher double digits. If we go back further, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 16 days. So we already know that 2 weeks Expo is not enough. So this is a stock right here that we're already saying, all right, our minimum expiration date for this is at least 30 days. So right now it is September 16th. So we're already saying we can't go with September 21st Expo, the monthly Expo, too short of a time frame. We can't do next week's Expo. You know, most of these are 17 to 20 days for the waves. So we're looking for something at least 30 days out. So we're looking for the October 19th monthly Expo as a minimum expiration date. And like I said, our entry is once she gets down to either one of the SMAs and bounces above it the next day once we get that confirmation, or once she gets down to the lower band of this channel here and bounces above it. Okay, so that's our entry. Our exit, like I said, is once we see that wave completed and we see some consolidation taking place. First day we get a close below the previous day's low. That's our sign that we're exiting the trade, that it's going to be entering into consolidation mode. So those are the three types of chart patterns that we trade, guys, and those are how we're looking for our entries, our exits, our strikes, and our expiration dates. So it's very simple, guys. Like I said, if you're waiting, like I said, we could see what's happening right now on each of these charts. Last week, we had a fantastic week. We were in breakout week. We were in the next wave. You know, we were having that next climb. You know, so right now, this week is going to tell. Monday and Tuesday are really important. We're going to see if Monday comes around, and immediately I'm telling you, if we see the market down more than 50 points tomorrow, I'm already going to say that we're going to start into consolidation before we start that next move higher. Now, how long is consolidation going to happen? Well, take a look, guys. You know, you could see 1, 2, 3, 4, 5. 5 days on that consolidation. 1, 2, 3, 4, 5 days on that consolidation. 1, 2, 3, 4, 5, 6 days on that consolidation. Right here, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days on that consolidation. So you could see that we're running for about anywhere from 16 to 20 days, and then we consolidate for between 5 to 7 days. So that's what we could look for, you know, and have all these things in the back of your mind. Okay, she's typically consolidating for anywhere between 5 to 10 days, and then she's breaking out or having the next wave higher for, you know, anywhere between 15 to 20 days. And like I said, we're also looking for the SMAs and the lower and upper bands here. This is going to tell us everything we need to know for these types of chart patterns and these types of trades, what we're looking for, our targets, our stops, and our strikes and our expiration day. Now let's take a look, guys, quickly. We just went over that part of the class here. Now let's take a look at the Diamond ETF and the Qs. So this is going to tell us what the Dow and the Nasdaq's doing. So let's take a look at a Diamond DIA ETF here, and we're going to take a look. So you guys know I'm a big fan of drawing up on my charts and trying to decide what we're going to do. And for months now, I've been saying, going all the way back to you know, like April or May of this year, I was saying these are our resistance areas. Once we break them, this is where we're going to head to. And you can see every time we got up to it, you know, we consolidated and then we broke. Consolidated, broke, and as you can see here on the Diamond ETF, at least for the past, you know, 3 months here, we've been holding up pretty well with the 20-day SMA. So right now, we could already see that the Diamond ETF is right at that 262 resistance area. So what we're looking for tomorrow, if the Dow climbs tomorrow and breaks above that 26,200 mark, if the Diamond ETF here climbs and closes well above that 262, we could then climb to our all-time highs, which if we go back here a little bit more, you can see it's just basically a tiny bit higher here. Let's actually mark that down now so we know what to look for in case we break out. So let's make this a red candle. Let's make this the biggest one since, you know, it's at an all-time high here. So we're basically looking at 266. Okay, so if the diamond ETF here breaks 262, let's say it gets to 263, we could say, okay, the next wave higher, she's probably going to get up to that next resistance of around 266. So right now, tomorrow, we're already saying if the diamond ETF fails to break above and stay above that 262 resistance, she's probably going to do what she's been doing, which is coming back down to that 10 or 20-day SMA. So for the past, few months here, for the past, month and a half, she's been coming down to that 20-day. Every now and then she's coming down to the 50-day, but we could see once she comes down to the 50-day, she's quickly being bought and quickly rising after that and having that next climb higher. So like I said, Monday and Tuesday are going to tell us a lot. If Monday and Tuesday we see sellers stepping in, you should be out of all of your trades by Tuesday. So if Monday, Tuesday, the Dows are heading lower, the Dow and the Qs, NASDAQ, S&P are heading lower, then we're going to immediately look to sell our trades, take our profits, and take a run. Like I said, we had a great week last week. We locked in major profits last week. I showed you guys pictures of the trades, the confirmations, and the gains we had on them. So we already knew that last week we had that wave higher, we had that move, that climb, and so we captured those returns and those gains by locking in those trades, especially the larger trades. You have to do that. You have to take your gains once you have that big move. And like I said, we did have that big move here. If you were looking at the Dow or the Diamond ETF here, we could see the waves aren't as big as, we were seeing with Salesforce or some of the other stocks we checked. So right now, like I said, Monday comes along. If we're lower, if we have larger than a 75-point drop tomorrow, I'll exit the rest of my trades tomorrow and then possibly think about getting some puts or maybe a put spread for a longer-term Expo, like maybe next week's Expo or something, to try to capture that next consolidation round. So like I said, tomorrow if we move larger than 75 points lower, I'll immediately sell my trades, lock in the profits, and be looking for that consolidation phase. And then I'll be looking for an entry again once she gets down to that 20-day or possibly the 50-day SMA. Or, like I said, if we see something happen, this is a news-driven market right now. Trump could tweet something that could make something run and make another thing drop. So we're constantly looking at the Diamond ETF here and the Qs to see what the general market's doing. Because listen to this, guys, and this is really important. You don't want to get into a tech trade like Amazon, Google, Facebook, Microsoft if the NASDAQ looks like it's going to head lower, because those stocks are part of the NASDAQ. And if the NASDAQ heads lower, then most likely those stocks in that ETF or in that indices can also head lower. So, you have to understand that. If you're making a trade on Amazon, but the NASDAQ looks like it's going to drop or it is dropping, you could bet that Amazon's also going to drop as well. So make sure whatever you're doing, you're getting confirmation from the major markets that also is giving you a confirmation of that trend that you're looking for with that trade. So here's the Diamond ETF. Like I said, that 262 is major resistance. I've been going over this for a while. And, if we fail to break above that tomorrow and we have a move lower, if it's a small move lower, I'll wait until Tuesday before exiting my trades. If it's larger than a 75-point move lower, I'll exit my trades tomorrow. So that's what I'm looking for with the Diamond ETF. Let's take a look at the Qs now. Like I said, this is going to, I made this chart either on Thursday, no, this was on Friday. So I said, guys, this is going to tell us everything right here. The NASDAQ, the Qs, if we have a close below the 10 and 20-day SMA here, you better believe that the NASDAQ's going to head lower, and we're probably going to get down to at least that 50-day SMA. So, that's a 3-4 point drop with the Qs if she drops below that 10 and 20-day SMA. So if NASDAQ or the Qs head lower tomorrow and we see this candle closing below the 10 and 20-day SMA, we're already immediately thinking we're going to exit our Amazon, we're going to exit our Google, and any other tech stocks that we have. Salesforce, You know, we had a huge run on Salesforce. We have the 150, 250, 155 vertical call spread for this week's Expo. We also even have one for October monthly Expo that we've made some major returns on. I closed my regular calls last week for over 200% gain. I shared with you guys, but we also have the 150, 250, 155 vertical call spread for this week. So it's currently well above that. Also, big news on Salesforce actually. Salesforce just bought out, what company was it? They bought out Time Magazine for $192 million. It was just breaking news. I shared it in the trade room for you guys. So that's going to be very interesting to see what Salesforce does tomorrow. So guys, these are things that, you know, we're doing as traders. You have to understand there's a lot more to it than just looking at a chart, especially if you have a blank chart here. Let's get up a blank chart and show you what this looks like, because I want you to see how important this is. You know, let's take a look at Facebook, for example. Let's take a look at this regular chart with candlesticks here. If you're taking a look at this, you're already saying, you know, what is this chart telling me? So here's just a regular chart on Facebook. If you're looking at this candlestick chart on Facebook, you're like, what is going on? Especially if you're a new trader, guys. You know, we were all there at some point. We all started from somewhere. So if you're looking at this chart, it's not telling you too much. It's telling you we had a big drop and we had just the opposite of when we climb, we're having waves lower. We have our wave lower, and then we have some, you know, some buyers stepping in, some bulls stepping in to try to break out, and then the bears are taking over. We're heading lower, and then we're having that, you know, before it would have been consolidation, but now we're having some buyers step in, and they're failing to break above. The bulls are failing to break the stock out, and then the bears step in, and we head lower again. So you can see this is just exactly the opposite of the breakout or the channel patterns that we look at. You know, it's the exact opposite, just reverse. So, you know, if you're looking at this as a new trader, like I said, it really doesn't tell you much besides we had a big drop and we're heading lower. So like I said, it's important to drop on your charts. Use the SMAs, use some other studies, some other indicators. Use your RSI, Relative Strength Index, your MACD, Moving Average Convergence Divergence. Use whatever you can to help you. If you like using the true ranges, you know, there's thousands of studies out there, guys, and, you know, it's what works for you. I found a system that works for me that I like to use, and this is what I use. So find something that works for you and stick with it. But like I said, as far as charts go, you need to drop your charts, guys. You know, it's extremely important. You got to know where your targets are, where your stops are, where you think the stock's heading, and you have to look for certain advantages that are critical to making, turning your account into profits and making winning trades. You have to do what you can to, you know, to get into those great setups and find the perfect timing, the expiration dates. And if you're just looking at a plain chart pattern like I just showed you, it's not telling you much. So draw it up, look for those entries, those exits, those targets, and look for those studies to help you decide where they are. So now, right now, let's take a question. Like I said, the cues here, we're just looking. If she bounces off this 10-day SMA here and heads higher, then we already know she's going to go back up to that 188 and test that area out. And then she might either, you know, she might struggle with 188 and trade sideways a bit before either breaking out or heading lower. Or like I said, what's going to happen, it's either going to do that, break out, and head back up to 188, or she's going to break below the 10 and 20, and as soon as she breaks below that, then we're exiting our trades, especially our tech stocks, and then we're going to look for that next wave lower, our consolidation phase, back down to that 50-day SMA, or possibly down to the next support of around 180. So that's what we're looking for, guys. It's that simple. If you wait for those types of setups, that's what's going to propel us to large profits, large returns. You guys are seeing some of the trades we make. You know, you just have to be patient and disciplined for this. You know, the market's not always going to work in your favor. It's going to take you time to learn this, but if you follow what we're doing, why we're doing it, that's the most important thing, why we're doing what we're doing. We're not doing what we're doing just, you know, to flip a penny or flip a quarter and pick a side. We're doing calculated risks, calculated trades, and determining where we're going to take our profits, where we're going to cut our stock or our trade if it goes against us, and go from there, guys. Like I said, the three main types of chart patterns to trade for large, consistent returns, and this is proven, guys. You know, that I'm going to look into further detail of the probability of hooks versus breakout momentum versus channel range bound trades, and get back to you on that, because I'd like to know what the percentage of probabilities are for those three types of chart patterns as well. But like I said, if we're waiting for those three types of chart patterns, we're disciplined and patient to wait for those, and then wait for our entries and our exits, and then take our profits once they get there, or immediately take our loss should the trade go against us. That's going to prevent us from blowing our accounts, from making mistakes on trades and taking large losses. So it's important to follow that. And the charts aren't going to tell you that all the time. You know, there's nothing that's plain black and white and that's going to say, here's the buy, here's the sell, it's going to work 100% of the time. There's nothing like that out there. So we have to do what we can to take advantage of certain patterns, certain charts, and certain types of momentum, and really take advantage of that, guys. So that's what we're doing at TSE, is we're being patient, waiting for those setups. And you see, as the days go on, you know, if we're just in a breakout phase, you see how I was last week. I said, guys, buy, buy, buy. And if you guys listened to me, you had a week like I had, a huge week. Like I said, I had about an $80,000 week last week. I did do a few day trades on Friday that I lost probably around 10, maybe 15 grand. So maybe I only made around 65 to 70,000 last week, but it was still a great week. I waited for those setups, those three main types of patterns, and you guys seen in the trade room, when I seen us going into that next wave, that next climb, that next breakout, I was saying, guys, buy, buy, buy. We just broke this area. We just broke that. Let's buy, guys. And if you listen, like I said, you had a substantial week of gains. So this is what we're looking for, guys, this week. We're looking for the Qs, the NASDAQ, to break either below the 10-20-day SMA, or we're looking for a bounce off of this and to head higher back up to that next resistance around 188. So if the Qs bounce off 10-day and we climb tomorrow, like I said, then there's a great chance that the tech stocks are going to rise this week, and we're going to see the Qs get back up to that 188 target before we start to see some struggling. So like I said, if we bounce off of here, we know we got a few days at least, a nice little swing trade for 2 or 3 days to take advantage of that swing higher, possibly up to that 188 resistance target. And like I said, if we break below that 1020, we're exiting all of our trades in the tech area and in the tech sector, and then we're going to look to consolidate back down to that 50-day SMA or down to support, which is around 180. So it's important that we're waiting for that. If you want to be a successful trader, guys, these are the things you have to wait and look for. All right, so let's take some questions now. Then I'm going to close this out. I'm going to do a separate video of some, like I said, I have some friends here from the Carolinas who were in the path of the hurricane, who came down to take some shelter with their family. They're still here. He's a new trader as well. So I'm going to bring him on camera in the next video, and we're going to go over some new trader questions that we didn't script. There's nothing written down. He's going to ask whatever he wants, and I'm going to answer it. And like I said, if he's a new trader, we have a lot of new traders at TSE, so I'm sure a lot of you have the same questions. So we'll do that later on, and then we're also going to do a short 5-minute video of going over our current trades, where they stand, what we're looking for as far as stop loss and as far as our target. And like I said, we'll look at the general market and see what that's doing, if that confirms our suspicions with our trades. So if that looks good, I'm looking forward to the week. Let's take one more quick look at the futures before I take questions quick, and then I'll get started on the next video. So we were down 44 before when I said? I think the S&P was down around $4 and some cents. Yeah, the NASDAQ was only down around 19. So we're looking at that. Guys, we're looking to see what the Dow, S&P, NASDAQ are doing as far as the futures go. And most importantly, we want to see what the Asian and European markets are doing. So whenever I'm checking futures, I'm always checking the Asian Pacific markets. You know, right now they're down a little bit. They're down over 1%. You know, so we'll see. It's early on in the day. They're starting to climb now. We'll see what happens. It's still pretty early. Oil before was down over 25 cents or 50 cents, so that rebounded nicely. We see gas, natural gas higher. Gold's pretty flat. So we'll see where we go from here, guys. It's still early. It's only 10:30. We have a long way to go from now until opening bell, 11 hours. So we'll see what happens. Let's take some questions and answers now, and before we go on to the next topic. All right, guys. So anyone have any questions? Anyone have questions?
Can you take a look at Amazon and Google chart?
Lowe's and Home Depot going into a rebound. Call versus spread. All right, Dr. Phil, that's totally different. I went over that in another video. We could go over that in the next topic, though, because call versus spread, that's a minimum of a 30-minute video. Just any questions on what we went over now? Okay, so someone asked about Lowe's and Home Depot. Let's take a quick look at Lowe's. We got into Lowe's, made a nice gain. Lowe's still in breakout mode, still hasn't dropping below the 10-day SMA. This, guys, you see, I just type in Lowe's, LOW. This is what comes up, because this is what I was telling my members. This past week, we got in right around support of around 108. We got in actually on the 7th, or was it the 11th? I think it was the 11th we entered. No, it might have been... It was either the 7th or the 11th we entered into Lowe's. It had a large move higher. We made a nice gain on that. We took that. And like I said, so Lowe's right now, we're looking for either a close below the 10-day to consolidate back down to 108 support, or back down to the 20-day, or we're looking for the next wave. The next wave, if Lowe's does have a wave, you see here it had a climb. You know, let's take a look, for example. Here's a climb. Here's consolidation, climb, but then again, it's really not a wave because we didn't cross above this resistance area. So, but you could see the kind of moves that it has. And, you know, if we start to see some consolidation, you know, the stock's going to either come back down to that 108 or consolidate before it has that next wave higher. So if it does have that next wave higher, what we're looking for as an entry is 115 or higher. We want to see a break above the highs of that previous wave. So if we consolidated here, came back down to this 10-day SMA down to around 111, what we're looking for as far as the next wave higher is a break either above that 10-day or above that. Since Lowe's is at highs now for the past, you know, few years, it's at all-time highs right now. So if we're looking at Lowe's, like I said, if she consolidated back down to that 10 or 20-day or down to the 108 support, we're not entering into that trade until we get a bounce confirmation, which a confirmation then would be a close above the SMAs. Or, like I said, that next wave. If she just came down to the 10-day SMA but didn't cross below it, we're looking for that next wave to go well above 115. So our entry then could be 115 if we're looking at as far as a wave. But if we're looking for complete consolidation down to the 108 support or the 20-day SMA, then our entry is going to be the next candle that we get that's totally above the previous day's high. And we'll get, if you guys have questions, guys, like I said, just ask questions in the trade room, ask questions in the Facebook group. I'd be glad to go over that with you guys. If you guys have questions about a certain stock, you want my opinion on it, I'd be glad to give it. But that's what we have to look for. Let me get back to this guy's questions. Lowe's and Home Depot. So right now, guys, currently Lowe's is still looking fine. If it breaks above this day's high right here, which was about 114, let's say 60. So if Lowe's goes above 114.60, then I feel she could have another wave higher. So I'm not looking to enter Lowe's until she gets above 114.60, or if I see that she's below the previous day's low. So if she drops below 112, then in my mind I'm saying, okay, she's consolidating. She's going back down to either the 10-day SMA, the 108 support, or the 20-day SMA is right at the 108 support. So that's what I'm thinking. That's what I'm looking at. As far as Home Depot goes now, let's take a look at that stock. So Home Depot, what did I tell you guys? We're looking for waves. Here is a wave consolidation, wave consolidation. Now tomorrow, if we see Home Depot, if we see it above, let's say 210.70, if it closes above 210.70, then to me that's saying we're going to go and retest this high here on September 12th. So she's currently at 209.30. So if we get a break, a candle above that, like I said, 210.60 or 210.70, then in my mind I'm saying, okay, she's going to go and retest that high from the 12th, September 12th, and I'll have a target of 215. If I'm looking for a regular call, or if I want to do a spread, like I said, I could do, let's see, Home Depot, HD, we'd be able to do something like the maybe the 207.50, 210 vertical call spread, even for this week's Expo, if we got a confirmation of a bounce higher tomorrow. But like I said, it's important to see what's going on with our studies too. We could look at the RSIs, we could look at the MACD. As long as things still look fine and we get that confirmation, that's what we're looking for. So like I said, let's see what the markets do tomorrow. We probably won't make any trades. If we do, they'd be closer to the end of the day. I'd rather take Monday to study, see what the markets do, see how we see what the price action's like, and see what happens. But like I said, if the Dow drops more than 75 points and the Nasdaq's down, the equivalent percentage-wise, then I'm going to be exiting my positions and taking my profits. If we climb tomorrow and we turn green, for example, like I said, Home Depot here, a great entry would be if we got somewhere near a close of above 210.70, and our target would be 215. We're looking for that wave consolidation, and it's best if you get that consistency, guys. Home Depot's not a good example. Let's go back a little bit more and we could see. So let's also use the moving average here. Let's use the 100-day and the 200 and see what they're at. Let's do that. White. So notice why I picked the 100-day. Let's also do the 200-day. First off, these are institutional moving averages. These are what the big boys use, that the hedge funds and mutual funds. Let's use a greenish one, I guess, for the 200-day. All right, so if we're looking a little bit further out, here's the 100-day SMA, here's the 200-day. So she's holding pretty well above the 100-day, but it's not for long. It's, just for the past 3 months. So to me, if it's been doing something consistently for quite a while, that's a great sign for me. If we go back 3 years, for example, we could see that Home Depot, it's more closely following the 200-day SMA than anything else. Why is that, you ask? Well, Home Depot, Lowe's, these are your more solid institutional stocks. These are stocks that the larger institutions are buying tens of millions of shares of these because they're your more secure stocks for the long run. Home Depot's, Lowe's, they're not going anywhere. People are always going to be remodeling, building. So these are stocks that hedge funds, institutional funds are looking to buy and hold for the long term. Whereas something like a tech stock, that might be a sector that's breaking out, that might be more of a momentum that, are more retail traders trading. So like I said, it depends what sector and what type of stock you're looking at. Look and see what each of those, you don't need anything more than the 10, 20, 50, 100, 200-day SMA. There's nothing else you need, in my opinion. And like I said, we're looking for tops, we're looking for channels, and we're looking for the SMAs. But that person who asked that question about Home Depot or Lowe's, me personally, I think Home Depot is a better setup. And I'm actually going to put that one on my watch list for this week and see what happens with that. So any other questions? All right, guys, so it's almost 11 p.m. now, so I'm going to end this video, upload it to YouTube, and then I'm going to do another short video later on tonight if we have some time. So everything's going to be uploaded to YouTube. I will see you guys in the morning. I hope you all had a great weekend, and stay safe, God bless, and I hope those of you that were in the path of the hurricane are safe, and I hope your properties, houses, are everything's fine with that, and if you guys have any questions, comments, please shoot me a message, an email, call me, whatever you guys need, because it's important that we start going over our strategies, why we do what we do, and what we need to be looking for. So we're going to be doing classes like this every single week, as long as you guys give me the topics you want to talk about. So we'll set this up like a course where every week we're doing something.
You wanted to touch on your Amazon call. Somebody asked.
Can we review Amazon charts? Some of us still having calls for the October 19th Expo. Sure, let's take a look at Amazon.
This is what you have. On Google, he asked about. That's what we have now.
All right, so the Amazon, we have the 1975, 1980 call spread for October 19th. That was our official trade, and then we also went over an idea of the 2045, 2050 for the October 19th Expo. So let's take a look at Amazon here. All right. So Amazon, once again, Amazon's following that 20-day the most closely. So let's get rid of this 100-day and the 200-day SMA. Get rid of those. And again, this is something I've been showing for weeks now. We have 210 small resistance area before we reach all-time highs of around 2050. And that's right when we got in. Once we broke above that resistance, I was saying, okay, we're probably going to head to that 2100 target area by October 19th Expo. The reason why I picked October 19th Expo, it's 1 week before they report Q2 or Q3 earnings. And there was also some news that I gave about Amazon. I forget what the news was at the time, but Amazon has been doing extremely well for months, for years actually. If you look back at the 3-year chart, I mean, look at that climb Amazon's had since Trump got elected. It really has had a significant climb. And that's basically for some regulations being, taken away from a lot of these industries. But besides from that, let's get back to the chart here. Right now we're seeing it had a breakout, consolidation, and then we're going to look for that breakout. As soon as we either get a bounce from that 20-day SMA, you could see, obviously sometimes it's going below, a little bit below the 20-day SMA, but you're not seeing a full candle below the 20-day SMA. Some of it's, at least above it. So, unless we have a full candle below the 20-day SMA, then I might say, okay, she might head down to that 50-day. But we're not seeing that. As long as Amazon's holding above, let's say, $19.50 a share, I'm fine with it, especially with the October 19th monthly expo. Now, if she did cross below the 20-day SMA, that's my stop. That's when I'm going to exit, and then I will re-enter into that trade once I get a confirmation of a break above. And, with trading, everyone has losing trades, guys. But what you're looking for is a way to minimize your losing trades and maximize your winning trades. If you're able to minimize your losses and capitalize on your winning trades, you're going to do extremely well. So, you have to understand when a stock does go against you, if it breaks below your stop loss area, you have to exit the trade. You can't hold on to it and hope and wish for the best. You have to follow your plan, your trade plan, and follow what the chart's telling you. So that's what I'm saying for Amazon, guys. Gold. Jeff, I just read an article on gold that they're expecting gold to break out like 20% from now until the end of the year. Obviously these are some analysts that probably have a large position in gold, and they're trying to get they're trying to get more buyers to step in. But to me, gold, I don't like it too much. Unless you're buying gold for the long term, gold really hasn't done much since Trump's been president. I mean, think about it. look, since Trump got elected, when did he get elected?
16.
16? So he got elected in the right around here. And here's actually the, guys, look at this. What did I tell you before I even looked at this? Here's where Trump got elected. Look at what happened. When is election day?
November 16th?
November 2nd?
Yeah, something like that.
So here's when Trump got elected. We had a drop, and ever since. So here's before Trump was elected. It was around 125, and you know, she never really got too much higher above that. I don't like gold, guys. I mean, yes, now gold chart, GLD chart, I mean, this has had a significant drop. I would enter into this trade if she broke above the 50-day SMA. I'm telling you right now, guys, if GLD breaks above this red 50-day SMA here, buy it, buy. That's a great entry. You know, usually you're going to get a nice break once she breaks above that 50-day after being in a trend. And guys, notice what I tell you guys, the same thing, but the reverse happens when a stock drops. So we were talking about how she got down to the SMAs when she was climbing. When she consolidated, she dropped down to the SMAs, right?
Sure.
Look at what we're looking at now when the stock drops. You know, when she climbs, she's getting to that SMA and then dropping. She's getting up to that 20-day dropping. She's getting, you know, up to that 10-day dropping, up to the 10-day dropping, up to the 10-day, broke above it, broke above the 20-day. Now she's at the 50-day. So what does that tell us now? If she breaks above that 50-day, and if she also breaks above the candles on the 8/27, so if she breaks above the candles on August 27th and August 28th, and breaks above the 50-day SMA there, that's our buy signal. You want to buy some calls at the money with at least a 30-day Expo. You're seeing here, here's from June to August. So that's actually 2 months there. So, you know, 30 days minimum, 30 to 60 days expiration, and you're buying an at-the-money call if she breaks above this 50-day SMA. And I'm telling you, that's going to work out to be a great trade if you buy some regular calls and trade that once she breaks above that 50-day. Mark my words on that. We'll come back to that. Guys, remind me about that. We'll come back to that 30 to 60 days from now and see if she does break above that. Like I said, it's a buy. If she doesn't break above that 50-day, and like I said, when I say break above, I mean a clean candle above. So see here on this 50-day SMA, see how this next candle here is well above the 50-day SMA, and it had a clear break. You know, there was no confusion about it. It wasn't just straddling it or anything. So we get a clear break above that 50-day SMA and above the highs on August 27th and 28th. That's going to be a great buy signal, and you're going to look to capture a nice return, you know, maybe up to 120. You know, me personally, I'm looking at that 117 as a target personally. You know, that's where we have some, you know, we even have some resistance right here. So this is what's telling me 115 is a big target. You're looking back here on 7/7 of 17, and we see we have some support that was back on that day of around 115, and right now you see from 8/27, 8/28, and then the previous day's candle on 9/13. It got up to near that 115, but it quickly retraced. So now, what do we say? Now, if GLD closes lower tomorrow and it's below that 10 and 20-day SMA, then we could buy some puts on it and capture and have a target of, you know, maybe 111.50, you know, which is a 2-point move lower than where it's at now. 111.50, maybe down to 111. So that's what we're looking for. If tomorrow comes along and if by Tuesday she's below the 2 SMAs, you know, then we could buy some puts a minimum of 30 days till Expo, and we could have a target of 111.50, and that's going to give us a nice, you know, even if it's a smaller return, it's still going to give us between like a 25 to 50% return minimum. So we could look at something like that, or like I said, if she breaks above 115 and above the 50-day SMA, we could get some calls, and we could have a target of like maybe 117, 118, and if she breaks above that, then maybe 120. So we have to closely look, see what happens. You know, like I told you guys last week, If a stock's trading between SMAs, it's not telling us much, and it's not tradable. You know, just like right now, GLD, it's not tradable. We want to see a break above those levels I talked about, or below those levels I talked about. So once we see that and that happens, that's going to give us our signal and our confirmation that we make that trade. So I hope you all enjoyed this class. Next week, I want to start doing a few more classes each week. So maybe we'll do one during the week and one on the weekend. I really want to teach you guys more about the, more about the details of this trading plans and how to follow along with these chart patterns. So I hope you guys enjoyed class tonight, guys. Like I said, I hope you're all safe from the hurricane and the storm that just passed. If you guys need anything, have any questions, feel free to message me, call me, email me, or message me in the chat room or the Facebook group, Facebook, whatever is fine. And I'll see you guys in the morning. All right, guys, take care. You're welcome, Sanika. God bless. Have a great night, and I'll see you tomorrow. Take care, guys. Bye-bye.